technical analysis for the end of the week. Little summary here. Prices are continuing in this minor downtrend. It's also part of a cup width handle at the same pace and in the same direction as they've been doing for the previous several weeks. On the weekly close at the end of the day, we also have the 3-day close, and that comes in again 3 hours 16 minutes. Again, we're at current rate making a tiny bit of a lower low. Perhaps it's actually really confluent with where we're at, but if it is lower, you can see that there's a touch of bullish divergence in that the oscillators themselves haven't made a lower low. And so if we close in around here in 3D time frame, that's good, but I see the price is at least touching down towards the 618 Fibonacci retracement, which is at $194.65, perhaps at some point during the day or then later. And then when you drop down, it's also the 2-day close, which also closes 3 hours 16 minutes from now. But as with the actual close, if this is a clip and you're watching it later, you can tune in and I'll be here for the close. See that currently price is just below the $200. Also on this time frame, you can see that in terms of body close, we're much lower 2 days, and so it's only down there on that. But if you look at the MACD, it's like hugely bullishly divergent, right? Hugely on the 2-day time frame. That's significant, right? Very significant and very positive, regardless of what we do with prices. And we'll go down to the lower time frames and we'll talk about why it counterintuitively might actually be positive for us if prices do finish down or even lower than they are at the minute, in terms of what the reaction we might see. And again, if you look at the RSI, you can see again like this is a series of higher lows while prices are making a series of lower lows. That's extremely bullishly divergent. It's something that literally nobody else is talking about right now, and it's painting a picture for us, a picture of a huge reversal coming, which could have a huge move on it. Dropping down to the daily time frame, you can see, well, this again, picture of lower momentum on the MACD. Again, you can see something very similar on the RSI. You could see that, potentially we're at the same place, or soon, if this is a lower finish, we would have a lower picture on the RSI. And our price action, if it finished in around here, would also be low. So you'd neither have bullish nor bearish divergence. Alternatively, if the RSI ticks lower and prices then go up, that could put in a touch of bearish divergence. Just check that noise was meant that everything's okay. Sorry for that interruption, just check everything was okay with the loud bang there. We don't mind if the prices finish slightly lower here, because at the very least that would put in some bullish divergence, and alternatively if the prices go higher and the RSI drops down, then you'd see bearishness, but I don't anticipate the bearishness playing out. I also think because of the nature of this area here and the way that this Fibonacci 618 comes in, as you can see on the 4-hour time frame here, a slightly more clearer picture despite all these drawings on the charts. The 618 Fibonacci retracement coming in at that area will act like a magnet for prices. We've already got very close to touching it once, and close enough is near enough in my book, but I wouldn't rule out another touch of it. And if that does turn into what ultimately looks like bullish divergence at the end, I'd be very happy with that. And I wouldn't expect prices to move below what is essentially like the center line of this channel now. The channel itself can be drawn lots of different ways. You could use these body highs here and you might get like a slightly closer to the middle type of center line, but essentially it's where it intersects all these lows and touches of the high when it comes back through it, and it's also touched it here once, and it may well be that's as low as we get, as close as you're going to see to the 618, because we never touched it at these two previous occasions when we came close, and some sort of a recovery. With that bullish divergence, it's across a number of time frames. I'd expect that when it plays out, it will take us back up to 212. It may even break through those levels and come back and retest that, and that might be when this formation starts to flip around. And like I say, GME is going to explode, pass it on, so bear that in mind. It will at some point return from this part of the channel to the top, or alternatively we break those levels, put in huge bullish divergence, and then in no way is it going to start breaking out the bottom of this channel unless some absolute massive fuckery is going on. And if that was, we'd see it at the time and we'd be buying the shit out of it because we know a huge bargain is coming. And on that night we'll talk about some other factors. Down at we'll stay on the 1 hour. talk about these EMAs, because this is the sort of thing that people might worry about, and they say, well, there's a negative splay on them and they're pointing it down and so on, but that's the nature of what you'd see when the downtrend finally extends throughout a number of periods. You'll eventually see these things start to turn down. Also, we're below the 200, which itself isn't very positive, but that's all understandable, totally fine, because when you go back up to the 4 hour, you can see we're miles above this 200 period moving average itself, which comes out at the bottom of that channel. Another reason given us for a bounce if we ever make it there, which is also the confluent with the highs of this part of the cup. From the cup and handle formation, then back down to the 15-minute time frame, you can see that there's potentially some sort of W bottom, some sort of rounded bottom, some sort of divergence certainly between these 2 points, and then over the longer time frames we saw that already. It's like there's shitloads of reasons for this to bounce. You can also see that when you're down at this time frame, even here there's where prices are getting picked up at over a long period of time throughout the whole duration of this downward formation. We can see that it's consistently been bullishly divergent on the demand side, right? And so this is going to explode soon, and for my TAs, or if it's salt, then it's going to explode up. And do I put my the respect I have earned with you guys on the line for literally no reason? No, I'm not just out here saying shit because it might get me more viewers or it might get me more subscribers. It's so that in retrospect, when we all look back on this, we can say, well, we told as many people as we could, we helped as many people as we could, and those same people then turn around and help other people. And then we're not just passing on the news that GME is going to explode, we're passing on real goodness by telling them GME is going to explode, pass it on. I've heard it a few times this week, so it must be true. Everybody's fucking saying it, and if you aren't saying it, tell everybody, because you're only going to help them. On this time frame, we can talk about what the upside targets are. Now, for this bullish divergence, which we can see plainly takes us up to the top of this channel, and we don't break through it, then we'll have another reassessment and look at things. If we do go through it and recover this Fibonacci that we've taken from our highs recently down to our lows, we'll just get that drawn in properly. Where is that one? That's from down here. This is it here, isn't it? Yes. Zoom in because it is too tough to do it on these tiny pictures. There's your ultimate low there. Yeah, so if we do break through the top of this channel, where we really want to see prices go is above this 236. It's 236. You can't see the numbers on, put them to the right hand side to be able to see them. Here's the 236. Comes in at, it's a 236 Fibonacci retracement, which comes in around 224.82. Get above 224, 225.50, and you open and close a 4 hour candle there, and the next one opens again above that price. Prices will go shoot up. They won't stop at 243, 244. They won't. They might stop at 259 briefly and retrace down to the 244. But the truth is that move is taking you into 276. And once you get there, it'll be high fiving all round, because you'll look back on this and see we've had bullish divergence. We've broke through this channel. That alone takes the measured moves to these sorts of areas. We've put in what might be a rounded bottom, a W bottom, or an inverted head and shoulders. You'll add all that in, you'll say this is going to take us the full length of the move. You'll talk about the things that Frostcrest touched at the start of the question and say the duration of this formation is so long that does that mean that this duration of the cup with handle will be longer? And the truth is, you'll look back on it and you'll see, well, slightly, but more pertinent is that the explosive nature of the move takes you the full 100% plus on it. And if there is like X, A, B, C, D type of formations going on at the low here, which it looks to me like there is, if not a harmonic, which I was meant to draw in before, but the technical difficulties today were a nightmare. I'm not taking the pace to do it during this clip. Well, you'll see that the prices will actually extend up to like the 1414 and the 1618, and that's the sort of thing you'll be looking at when this move breaks out, and it'll be taking prices up to the the low 400s. And before we get there, we'll have a little bit of work to do at 343. And sure, we might go up there and come back, but what you're looking for is a weekly close opening above 343, at which point, when you go back from the 50 minutes and work our way all back up to the weekly chart, and you go in and you say, well, where are our highest high closes? Well, it's up here at 325, 324, 323. And you put in weekly closes above our previous wick highs, and above that body close, and open and close weekly candles up there, then you talk about blue sky breakout. That's nothing, man. This is stratospheric, and at that point, it's like MOAS or no MOAS. Prices will consolidate, prices will go up, prices will start aiming for 2,450. That's without liquidations, that's without shorts covering their positions. That's because everybody can see where this is going, and everybody's going to want a piece of it. You'll also have defeated every possible bearish thesis will be completely defeated, because when you look at that on the weekly time frame and you go to your point and figure chart, I call go figure your fannies. You get a link to this for free in the description of all my videos. You can see the Wyckoff distribution. That theory falls apart when prices get above this 3,335, 333, 343 area. I say it for safety's sake, right? I mean, I'm sound bullish as fuck, and it's true, I am. But at the same time, when I give out technical analysis, it's like it's supposed to be robust so that it helps people, and that's like with a degree of caution built in. I say that target, but it could indeed be a tiny bit lower. And once you open and close weeklies above this level, you've done something it's never done before. And you might think you have in terms of looking at a linear or a log chart on with a scaled x-axis, but the truth is, when you remove that fakeness and you look at the value of something without this stupid time period shite on top of it, you can see, hey, look at that. We've never put in such a continued trend towards creating new highs with also creating higher lows and higher highs. We've never done that before, and as such, it's the antithesis of Wyckoff distribution. In fact, it proves the opposite to be true. So this is what you're looking at. This is the way the technical analysis goes, and I hope that was some help to you. I'll go back to the normal chart, see GME moons, what I like to call it. As I say, there's links to all these in the description 24/7, so you can follow them along. We're on the 15-minute time frame. We're talking about the fact that prices are already accumulating. We're here touching the top of the oversold zone. That's going to hopefully catch a wave at some point, whether or not it comes back down price-wise. Hopefully it stays above this area. If it does and breaks above this center line here on a positive move, and it's yet to break the top of here, and it's still got some momentum behind it, which we'll be able to see because we're currently having a cross here on the MACD, or about to. Positive momentum starting to build despite the fact that we're in a downtrend. There's huge divergence on the go. This is going to go up. It might even go up by the end of today. So this is the sort of thing that you want to be getting in on. And you look at the DMI and you see, well, we're in the downtrend. This is the dominance of the DI minus, which represents that it itself has been dropping off as the trend has been picking up in strength. What is that trend? Because we can't identify it from the DI plus or the DI minus, but we can see it. It's there, screamingly loud in the divergence on the RSI and the divergence on the MACD. The momentum has changed. It's in our favor, right? Doesn't fucking matter what the price action says. We already know that that's fake. It's the fucking momentum is with us, right? This tide is turned. You look out across the battlefield and you can see what's actually happening. The twats that run their army are away dawdling off on their horse as their plebs that they put in front of them, the pawns that they use, most of which are synthetic shares and complicit, immoral twats. They're all getting absolutely slaughtered. All of them are getting slaughtered. It might look like they've got a huge body of mass of an army there, but they haven't, and they're getting totally destroyed as their leaders run away. And that leadership, that lack of leadership, that lack of conviction, that's all over this chart. It's all over it. It's also divergent on DMI. You can see everything. Like, you can see what they're doing, and you know you're winning. So, right. Psychology that they hope you to experience. They hope that this makes you feel. They want you to feel a particular way looking at this chart, and the psychology of it would normally work, right? It would, but you know what they're doing, and so immediately it fails. You know what this means, so you're buying it. You know the HPV and so on, and the volatility indicators that I've touched on in the last couple of videos. You should definitely watch. If you haven't watched them, you should definitely watch them. You know what they're saying. They're saying there's a life-changing move on the cards, right? Life-changing, whatever you want to do with your money. Hopefully you make the world better. And like, why do I talk about this being so many different positive things? Well, there is so much. And as this cup and handle shows, continuation pattern involves a retrace to test the trend, and as such should be looking at something like a trend test. How do you define those sort of things? Well, test of these moving average, test of support and resistance, test of the bottom edge of these formations that we some people put faith on, other people use as guidelines. All of that stuff, all of that's a trend test. You see it when you see on the lower time frames you flick below the 200 period moving average, but on the hourly and the 4 hour it catches you, right? And hourly we're aiming for it, on the 4 hour easy catch there. And that's the conviction that these people are demonstrating, right? That what the picture that they're looking at is, we're not fucking making it there, right? That's what they're saying right here. And how do we hear that? We hear it on this. Hear it on this decrease in momentum here. It's awful there. Again, on the 4 hour chart, it's awful. Awful for them. Great for us. Prices making lows. Momentum in our favour. Bing bong, 200 spot 00, and it's a lovely price. It's one you'll remember when you look back. You'll tell your kids about this sort of stuff. So tune in for a lifetime. Tune in for a live stream sometime. We talk about it, or I do, as the greatest story ever told about the greatest show we've ever seen, and it's a story and a song, and it's not played by me, it's played by you. It's the Symphony of the Apes. See you next time.
Bing bong, the price is wrong.